the surveillance credit system watching you. What if, wherever you were going, what you were being charged, what you're being shown was different based on what you're searching, the type of computer you're on, what's happening in your life? I'm here with Patrick Brenner from the Southwest Public Policy Institute. Patrick, how you doing?
I'm great, Philip. How are you?
Good. Let's unpack this because this is in the news. The FTC, the Federal Trade Commission, interviewing various companies on these practices. And I'm just going to throw this out there and then we can go from there.
Sure.
The Wall Street Journal reporting that Mac users are shown more expensive hotels on Orbitz. I mean, okay, I'm a Mac user. That rubs me a little wrong, right? Wall Street Journal found, varied based on proximity to competitors, that Staples changed the price. So if someone is close to an Office Max compared to Staples, Staples is changing the pricing, right? Instacart, FTC investigation following third-party pricing audit shows different prices for identical carts. Uber, ongoing scrutiny about upfront pricing, algorithmic price setting. This is not talking surge pricing. It's based on a person. That's a surveillance credit system at its worst, charging people based on what they're doing in their life.
There's a lot of different terms that are being thrown around in the public sector right now. Mm-hmm. There's this concept of surveillance pricing. The Consumer Financial Protection Bureau is calling it surveillance credit, whether it's being applied to consumption from a general goods perspective, consumers purchasing goods from the internet, consumers buying, hotel stays. And then there's the application of the concept of surveillance pricing with respect to financial services products. Are people being charged more for credit cards? Are people being charged more for their auto loans? Are the interest rates variable based on other data points that are being fed into the system for approvals? And I think that there's a lot of fear-mongering out there right now. And I think, actually, that surveillance pricing and surveillance credit can be determined to be synonymous with the concept of social credit score.
Okay.
There's this fear that's coming out of China right now, and that's been building over the last couple of years. The conservative right, the political right, the Republicans, they're all worried that social credit score is going to be used to debank people. Like if your social standing is not good enough, you run the risk of being debanked. Because you don't agree with our political perspectives, you will be debanked. Mm-hmm. There's a very famous case out there of an attorney, John Eastman, who was an attorney for the Trump administration in the aftermath of the 2020 election, and he was debanked by USAA. Now, from my perspective, as a consumer advocate and in the policy sector, I thought that John Eastman positioned himself as a pretty risky borrower. I mean, who knows what his credit balances were running? I mean, he could have been running negative balances in his USAA checking and savings accounts, and that's why they debanked him.
He could have, but we don't know if he have. He could have.
We don't know. That's just another, one of those famous examples of the social credit system that supposedly exists at play. And then from the left, the Democrats, the progressives, they're all concerned about this concept of surveillance pricing. Oh, poor people are being charged more. But Philip, I'm telling you, the system right now is so confused. The public is so confused about surveillance pricing, surveillance credit, social credit scores, that the left is even combating with itself. There's one study out there right now that says surveillance pricing could be a great equalizer. It could help redistribute wealth. Like surveillance pricing can be used to charge rich people more for the same product.
Right. So here's the thing is, the New York state of New York just passed a law stating that in the event that algorithmic pricing is done or this type of surveillance pricing is done, it must be disclosed, right? I mean, so it's happening. I mean, you're saying that you don't think the pricing changes? You don't think these companies can manipulate? Manipulation is the wrong word. They have the right to change the pricing, but it should be disclosed. I mean, like I would never think because I'm searching for a Mac that I'm going to be given a higher price hotel than a PC. Like, let's just keep that one example.
I can't explain why that was happening. With respect to the Mac case, mm-hmm. So this is the Wall Street Journal. This is Orbitz. These were Mac users that were being shown more expensive hotel options. Were they the same hotels as the users that were exploring those same hotels on PC? Or
Well,
were they different hotels that were just more pricey?
yeah, well, allegedly they were steered toward more expensive hotels, right?
Okay.
Maybe they're thinking the Mac user wants a more expensive hotel. I mean, I don't know the answer. I mean, but my
But if you're
point
looking at
is,
orbits, if you're looking at the home screen of like an orbit search or whatever, you see a list. Just
okay,
like scroll through the list until you find what you want. I mean, that's the
okay, fair
beauty
enough.
of
Okay,
these like
okay,
these platforms like
let's
this.
go to Instacart. Same exact cart, different pricing.
Sure.
I mean,
How is that happening? Why is that happening?
well, it's because the companies are trying to edge a few extra cents the profitability of a company. Now, that's their prerogative, right? Like if Instacart is going to charge more to people in certain zip codes, if Instacart is going to charge more to people who drive certain cars, that's their prerogative, but it should be disclosed.
Okay. Okay. I see what you're saying. Now, I have a question for you. Let's say I'm a first time buyer
Mhm.
on a website. I found this luggage company. I like their product, and they offer me a 10% discount for a purchase, and I'm a first time buyer. Is that not surveillance pricing? They've identified me as a first time purchaser. They're not offering that same discount to their existing customers.
Mhm.
What's the difference? Like practically speaking, what is the actual difference?
The thing is when you go to that website and that website says, "Hey, sign up for this, you know, first purchase 10% off." It's very disclosed and it's direct. I think the rub here is the lack of transparency of an Instacart. I would assume two exact carts in Instacart would be the same price. I mean, I think it's fair to reasonably assume that.
Sure.
As
Well,
opposed to manipulating it based on living patterns and zip codes and where you live and how much money you have, et cetera, et cetera.
I question the motives behind that. Why would it be beneficial for a company like Instacart to be charging one person, one consumer, more for their cart than another
Be-
consumer? Like,
because
what's the end
it's
goal?
because it's done in an opaque way and they can add a few dollars to their profitability.
Well, let's look at the Staples example, right? I mean, you're mentioning the Wall Street Journal found prices varied based on a consumer's inferred location and the proximity to competitors. In that instance, is Staples actually offering discounts to people that are closer to their competitors as a mechanism to entice more consumption from those would-be borrowers?
Yeah,
Or I'm
that's
sorry,
what
those would-be consumers.
yeah, so you're saying, yeah, well my mind went the opposite way. They're charging me closer because I'm right next door. And and you're right, but you're saying, hey, they're charging less to the person that's closer to Office Max.
Here, we're offering you a discount. Come spend money with us, right?
Yeah.
Who's to say which direction it went?
Yeah. I mean,
Now
go ahead. Go ahead, Patrick.
we've got to take the consumer, like the consumption of goods conversation out, and we have to talk about, is surveillance pricing actually being used to price consumer financial services products? Is it being used to price credit?
Mhm.
No.
Hard stop.
Hard
Absolutely.
stop.
Because we didn't give any examples of for pricing credit.
Right. I think that the concept that surveillance pricing is being used to price credit is a general misunderstanding from opponents of credit and opponents of debt, that credit is somehow lenders are somehow using cookies to ascertain whether or not you can afford to pay more, and
Mm.
therefore you need to pay more for your credit card. Your interest rate goes up because they said so. And credit is so highly regulated by so many different institutions, so many different government regulators, that trying to pull a fast one like that is impossible.
Well, and the practicality is it's not as needed because of they have the credit score. They know what the
Sure.
tier of the debtor is.
Well, and that's this obfuscation between surveillance pricing and just risk-based credit. I mean, if you want to break it all down, sure, surveillance pricing and risk-based credit, are they the same thing? In the event of Insurance, vehicle insurance. Let's say that I'm 21 back, 12 years ago or however old I am. 12 years ago, I wanted to insure my vehicle, new purchase, whatever. I get charged more because I'm younger, because I'm in a higher risk demographic, because young drivers are reckless. Statistically, they are statistically reckless. Is that surveillance pricing?
No. Yeah,
I agree.
I think you bring up a good point, and I think what we're both getting at is there is risk-based pricing. There should be risk-based pricing.
Sure.
And if what we're trying to do with this video, and I'd love to hear the comments from the viewers, is do you know about surveillance pricing? Right? Do people is this out in the world as it should be? If Mac users are being sent to, and that's an if, it's not proven, but it's reported by the Wall Street Journal, being sent to higher price hotels. If Staples is changing their advertising based on that, it should be known so people understand it, because then they can make a choice, right? They can make a choice on what they want to do. They can make a choice on what search browsers they're using, and then take the next step. Do you agree with that?
I do. And I think that a lot of the argument right now around surveillance pricing is really blurring three distinct concepts together. There's commercial surveillance that exists in retail space. There's credit surveillance, which I think is an academic term. And then there's risk-based pricing, which occurs in consumer financial services. With respect to commercial surveillance, it's browser tracking, it's cookies, it's behavioral advertising, it's personalized ads being served to you by Google ads or Facebook ads or whatever. And they're used to adjust product prices dynamically. Sometimes people get first-time buyer discounts. Come sign up for our newsletter, you get a 10% discount. And those companies that are running these advertisements know whether or not you're an existing customer because they have an existing customer database. Is that surveillance pricing? Or is that just personalized ads being served to you? I'm going to leave that as a question. Then topic number 2, credit surveillance, as the academic term. This is what scholars use to describe any long-term tracking of financial behavior. This includes traditional credit bureaus, which have existed for eons. And then there's actual risk-based pricing, which is a lender practice. This is using regulated credit data from credit bureau files, from bank account signals, from enriched data or alternative data. And this is required by law to be explainable under the ECOA, the Equal Credit Opportunity Act, and the FCRA. It's not dynamic. It's not individual pricing manipulation. It is the same principle that is applied in the vehicle insurance case that we brought up, which is young drivers get charged more for insurance because they're in a statistically more risky pool of drivers. And therefore, they need to pay more because more people like them are getting in accidents.
I mean, practicality is it need to evolve. These markets need to mature from that side. The credit markets are very, very mature. They've been around forever, or not forever, for decades. And
for as long as I've been alive.
And the more they mature out, the more we'll fine tune. We're just trying to bring exposure to it. Yep, Patrick, thank you for your time.
You bet. Thank you, Philip.
Bye-bye.
You've been watching the 720 Credit Score YouTube channel. If you want to rebuild your credit the right way, visit 720creditscore.com. Please like this video and subscribe for more great content.